Hello. How you doing, man?
Good, Joe. Hey, I like the background, man. The windows, you got some color going on there. It's
Started getting,
nice.
yeah, the one thing I have to do, and I have to apologize to Margaret Garcia, is I've got her painting there, but I need to show it. So I apologize to Margaret for that.
Uh,
This is
all
from the
right.
this is from the Art Unite event,
Sure, sure.
we can
Slightly
talk.
above that vase there, man.
Yeah,
It'll
yeah.
work
I gotta
well.
I gotta make it look right for sure. So
Cool. This is an art unite thing right here, man.
yeah, is that a record? A vinyl
It
record?
is,
Yeah.
sure. Okay.
Uh, well, look, guys, thanks so much for joining us again. We are Thursday, 2 p.m. for this week at least. Normally Tuesday at 2. We got a little busy this week, didn't we, Darren? We had a listing, we had an open house, we had
Yeah,
some
I'd
other
say
things.
sometimes we have control of our schedule and sometimes we have to adapt. And this week we had to adapt.
Yeah.
Uh,
So,
so
yeah, definitely thanks for joining us as you're there. We'll do the usual, right? We're going to go through seller wins from the last 7 days, buyer wins from the last 7 days, and we're going to talk about a topic we feel is timely. And usually real estate is timely, but we'll get a little bit more in depth about it. And for this week, it's about what's the best hedge against inflation. And of course, that is real estate, but we'll get a little deeper into it. So, what was I going to say, Darren? Oh, I got a haircut. So thank you, Kurt Thomas, over at Folklore Salon and Barber Shop. Good friend of mine. They're in Cypress Park, catering to LGBTQ people and me, and probably a couple others like me. So
I think so. It's funny, Joe. Your hair grows so fast that when I saw you,
yeah,
on Saturday or Sunday,
yeah,
when you get your hair cut, it's
yeah.
like you're taking off a pound of hair. I'm like, did you lose weight? In my head, every time you get a haircut, I'm like, oh
It's
yeah,
always an extreme. Yeah,
it
I should try
is.
to keep it like that, but no, I
Right.
don't. So anyway, go see Kurt Folklore. Really cool shop. Really good people. All right, so let me go ahead and do the disclaimer. Darren Hubert and Joe Cloninger are real estate agents at Avenue 8 under the Urban Hillsides brand. All opinions expressed by Urban Hillsides or guests on this video are solely their opinions and do not reflect the opinions of Avenue 8. There you go. You should not treat any opinion expressed by Urban Hillsides as a specific inducement to make a particular investment or follow a particular strategy, but only as an expression of Urban Hillsides team's opinions. This video is for informational purposes only. All right, there we go. All right, well, let me go ahead and bring up the article. Darren, if you want to just go ahead and get started
Sure.
on it. And
Yeah. This is a familiar topic. We discussed it a variety of times in different
right,
ways, and it's just driving home. I think the reason it's relevant again is because statistics came out again on inflation. But in addition to that, we all have a bias towards wanting information to be received the way it benefits us. And we have enough buyers out there that kind of still give us that I'm going to wait for the turn. I'm not going to commit and jump in. And
yeah,
I think this is partly for them because we want to see them win. We want to see them get a house. Um, and there's really not a lot of indications that anything is shifting soon. And if they saved cash to buy a house, that cash is going to become worth less over time. And that's disappointing. So,
right,
where do you risk that inflation won't be a long-term issue and that your cash will maintain its purchasing power?
right.
Or, just dive into the real estate market and like a lot of people are predicting, hope it doesn't shift.
Yeah. Yeah. Okay. Well, let's get into it. This is from housingwire.com, another industry resource talking about mortgages in particular, but overall the housing market here in the United States and sometimes elsewhere. So this is entitled "Why Owning a Home is the Best Hedge Against Inflation," and this is dated March 10th. So let's get into it. On Thursday, the Bureau of Labor Statistics reported the same trend that all Americans have seen lately. The inflation rate of growth is rampant and doesn't show any sign of easing up due to the Russian invasion of Ukraine. The Consumer Price Index for all urban consumers increased 0.8% in February on a seasonally adjusted basis after rising 0.6% in January. Over the last 12 months, the all time index increased 7.9% before seasonal adjustment. And Darren, I count on you to kind of nuzzle this all down into beyond the technical terms here. So help us all
Sure,
out.
sure. Yeah.
As you can see below, the CPI inflation rate of growth chart looks like many economic charts during this COVID-19 recovery and expansion. A parabolic type move deviated from recent historical norms. Our economy is running hot and the labor market is getting hotter. During the COVID-19 recovery phase, I predicted that job openings would break over 10 million. This week, we just broke to an all-time high in job openings with nearly 11.3 million. What does that mean? Wage growth is going to kick up. Early in 2021, I told the Washington Post that rental inflation was about to take off and will take the consumer price index up faster and last longer. For me, it's always about demographics equal demand. Wages
Right.
are rising, which means rent is about to get higher. You want to say anything there?
Across the board, man.
Yeah.
I think the majority of people would like to have people earn a living wage, make things more affordable. In LA, things are really pushed, and housing is one of the biggest costs of living for sure in Los Angeles.
Right.
But yes, in addition to house prices will be stable and it's the best place to invest your money, rent will rise tremendously because of the cost of labor, because of the cost of doing business. Now, the city of Los Angeles is trying to say, no, all these costs are going to rise, but landlords, you can't increase prices. And, in my opinion, that's kind of shitty. I don't want that ratio to shift, but how can you not allow them to shift that burden that's overall? I mean, people are making more money who are renters, maybe not all of them, but a good amount of them. I always feel make sure that money goes to those that really need it. In addition to that, obviously, inflation is going to continue to have pressure towards an upward trend because of the cost of transportation now. And that's going to be huge. That's going to affect everything with the cost of gas rising. Tough time to be a renter still going forward. So it makes housing even look more attractive.
Well, that's what this article, really is keying off of shelter inflation, but and I think it might touch on the gas issue, but I think that's a whole other level you just hit. So, shelter inflation, the most significant component of CPI, is making its big push is people need to live somewhere, and that shelter cost is a priority over most things. Rent inflation on a year-over-year basis has been extreme in certain cities, averaging over double digits. And just so you guys know, I just sent out this link. If you want to look at all these great charts, please do later. Now, we can see that being a renter has been problematic because rent inflation is taking off, gas prices are taking off, and even the wages are up. The monthly items consumers spend money on have gone up in the most prominent fashion in recent history. In most cases, seeing this type of rental inflation can motivate consumers to buy a home because renting a home isn't as cheap as an option anymore. However, if you're a young renter and looking to buy a house a few years away, this makes savings for a down payment much more of a problem. On top of all that, since inventory is at all-time lows, it's been harder and harder for first-time home buyers to win some bids because they don't have more money to bring into the bidding process. As always, the marginal home buyer gets hit with higher rates and higher in home prices. Now, single household renters are paying more for their shelter, making the home buying process more challenging financially. What can Americans do to hedge themselves against this? In reality, being a homeowner over the past decade has set consumers up nicely during this burst of inflation. How is that? Housing is the cost of shelter to your capacity to own the debt. It's not an investment. This has been my line for a decade now. Shelter cost is the primary driver of why you might want to own a home. The benefit of being a homeowner is that with a 30-year fixed mortgage rate, that mortgage payment is fixed for the life of the loan. Yes, your property tax or insurance might go up, but the mortgage payment is generally fixed. What has happened over the years is that American homeowners have refinanced time and time again to where their shelter costs got lower and lower as their wages rose over time. We can see this in the data. It has never looked better in history with the recent refi boom we saw during the COVID-19 recovery, since mortgage debt is the most significant consumer debt we have in America. This would imply that household debt payments are at deficient levels as well, which they are, as we can see below. All right. In the last 10 years, the big difference is that we made American mortgage debt great again by making it dull. While wages rise, long term fixed debt cost stays the same. It doesn't get any better than that. So, how does that make being a homeowner a hedge against inflation? As the cost of living rises, wage growth has to match it, especially in a very tight labor market. Companies can no longer afford not to increase wages to lure employees to work and retain workers. Wages are going up. That what doesn't go up? Your mortgage payment as a homeowner. So you can benefit from increasing wages while the most considerable payment stays the same. Why do I keep stressing that the homeownership benefit is a fixed low debt cost versus rising wages? While renters feel stressed about rental inflation and higher gas prices, homeowners never need to worry about their sub minus 3% mortgage rate increasing versus the 7.9 inflation rate of growth. Some people who are surprised by all this inflation we have had over the last year are now asking how the US economy can keep pushing along. Not every household is the same. If you're a renter, your rents have gone up, and that takes away from your disposable income and makes it harder to save for down payment as well. If you're a homeowner, the inflation cost isn't as bad. Since you are benefiting from rising wages, that offsets the cost of living, and you're safe in your home with that fixed product. This is great for a homeowner, but it contributes to a larger problem. The homeowner is doing a little too well and might have no motivation to move. Why would anyone want to give up a sub minus 3% mortgage rate and such a solid positive cash flow unless they're buying something that will make their cost much cheaper? People move all the time for many different reasons. However, let's be realistic here. Housing inventory has been falling since 2014, and 2022 isn't looking any better. Also, go ahead.
On that note, Joe, I'll just drop in the other article that I was reading.
Yeah,
We're not reading today, but it's a crazy figure. So housing inventory from 2020 to 2021 went down 20% year over year. And then housing inventory 21 to 22 has gone down another 25%. It's huge. The inventory is just continuing to deplete.
right.
Every week we get on and we talk about goods and bads, and we're always looking for what's the ratio of is there an inventory increase? Are there more actives than solds? And
Right.
it's really not looking any better.
Well, this is funny because we'll have an example later on when we go to seller wins and buyer wins. Okay, so I'll continue. Also, investors that have bought homes for rental yield are enjoying the fact that wages are rising because it gives them a reason to raise the rent. Right, Darren? In a low interest rate environment, rental yield is a good source of income. We haven't had to deal with high inflation levels for many decades, and back in the late 1970s, mortgage rates were a lot higher. So it's not an apples to apples comparison anymore. This is a brand new ball game with how beneficial it has been to be a homeowner in America. It's not great news if you're worried about inventory getting low, as I am. I often make fun of my housing crash addict friends who have been wrong for a decade. However, now I tell them you're implying educated homeowners who have excellent cash flow will, for some reason, sell their homes at a 40 to 50 or 60% discount just to rent a home at a higher cost than what would have been the case for many years. Human beings don't operate that way. However, there is a downside to homeowners having such good financials. They don't have a reason to give up a good thing. This is just another reason I keep saying this is the unhealthiest housing market post 2010. As you can see above, with the FICO scores of homeowners, their cash flow looks great. And against this burst of inflation, owning a home is a nice hedge. My concern has always been with inventory going lower and lower in the years 2020 to 2024. Currently, with homeowners looking so good on paper, we have entered uncharted territory where mortgage rates for current owners are at the lowest levels ever recorded in history. Inventory levels are at the lowest levels ever, and now the cost of living from a rise in inflation has taken off in an extreme way. The biggest problem I see here is that this can make the housing inventory situation much worse, as homeowners now have even more incentive to never leave their homes. There you go. Put a positive spin on that one, Darren.
Well, yes, they don't have incentives. Yeah, we're relying on more homes being built, infill happening, and it's in process. It is happening,
Right.
not at a fast enough rate.
Mhm.
And I do think people in our case are just leaving the city. This is why secondary markets have exploded in the last 2 years.
Right.
Prices have gone up in adjacent markets in conjunction with the fact that a lot more people can work from home. The
Yeah.
timing of that was that was the perfect formula for
Mhm.
those secondary market prices to rise,
Right.
in a big way.
Right.
So, gosh, man, I mean, I have this thought in my head
Yep.
that I've always had that I don't know that it'll ever happen. And that is, Joe, you there?
Yeah. Keep going.
Okay, I
I'll
can't
figure it
see you,
out.
but all right. So I have this thought, and I don't know. I've never heard the rumblings. It's a unique idea, and that is that there should be some disincentives for investors to own single family homes.
Mhm.
They can own all the multi-units they want. That's a business. There's a whole structure there, but it really is. I feel, like the single family homes being scooped up by investors really is shifting the market even further than it probably should. And those, Joe, you there? All right. Well, I'm not sure if I'm live or not, but I'm going to keep talking in case I am.
You are, man. You are.
Okay, cool.
Keep going.
So if there's, a disincentive on interest rates, if there's a disincentive on profit structure and taxation, it might disincentivize and create a little more of a first-time home buyer market on a long-term basis. I never want to do anything about past inventory where people can say, I created this whole plan. And like I say, I put a lot of energy into certain investments, and for them to come in and change that seems inappropriate. But to say anything going forward is going to be structured differently, I think is the one glimpse of hope I have in the moment. So other than that, some of the prices, I will say, have risen based on expectation of inflation. So I don't know that future inflation is moving them up exponentially. It's more about the inflation that was expected to come. And we'll see where it continues to move towards.
Right. Right. Well, look, man, I am having some technical difficulties, but we can keep going. Let me see. Let's move to um, our seller wins and buyer wins. And I'll keep working on my camera, but let's go on into there. Let's see. Okay, so seller wins and buyer wins. Guys, this is basically from the last 7 days. What do we feel are some notable solds in the market that we should pay attention to, along with some notable buyer wins? And Darren, one of the things that I noticed, unfortunately, and it's kind of strange, it happened for me at least this week only, is that there were not many reductions in price. There was like a $5,000 reduction in price overall for the solds that we saw
On the solds.
Yeah, really not a good thing to see, depending upon what side you're on there. But let me
I mean, there have been cancellations, there have been some relistings. I don't know if in this particular pool here you're seeing, but people just throw out random things, particularly out of area agents. Sometimes they just don't understand the market well, which is why sometimes you have huge upside. But we also see local agents with huge upside. um,
Yeah.
to the sale price. Sometimes that's that they're just trying to, be conservative and make sure the property will sell based on comps, but the market moves forward so much, and it's always hard to gauge the emotional component of the purchase. Um, and that's why some of these prices go completely nuts sometimes.
Okay. Well, look, again, my camera is restarting. We'll see what happens there. But let's keep going. So here we are, sold listings. As I look at it now, there are 26 listings that were sold last week or last 7 days in Northeast LA. Here's the map. And we will start, Darren, with what I see as 5243 Stratford. So let's take a look. 5243 Stratford. There it is. So this started at a list price of 1,680,000. It landed at a final price of 2,210,000 for a $530,000 increase. Wowzers. Let's take a look here. Okay. And there it goes. Oh, beautiful. Looks like it's fairly new construction. So 5243 Stratford Road. This is Highland Park. It's a 4-bedroom, 3-bath, little over 2,000 square feet of living space. Again, sold for $2,210,000. It's on a 6,200 square foot lot, and it took 13 days on the market to get sold, or go into escrow rather. And let's see, this is brought to us by, oh wow, what is this name? Allison So over at Compass, Highland Park. And then Meredith Gruska, Party Properties on the buy side, representing the buyer. So, wow. I almost want to venture, Darren, that this is one of the highest prices in Highland Park, or I might be missing a couple.
I think this target's hit periodically. It's there will be higher sales, but they'll probably be slightly larger in size. So for this, 2,000 is a decent sized property, but that is a great price, buddy. That's for sure.
Yeah. Okay, well, let's move on to the next one. Obviously, this Stratford Road, it's very obvious why it reached that high price, with all new construction, it looks like, and an ADU.
And an ADU in the back. Yeah.
All right.
They're still marketing and selling all these things, which is interesting to me, as they listed it as a single family, even though it's has a rentable unit.
Right. All right. Well, let's take a look. Now, this one is near and dear to me for several reasons, but really, it's more about how near it is to my house. So a little shocking. So this is 2145 Griffith Park Boulevard, and let's see, this is in Silver Lake. Let me hit the button here. 4-bedroom, 3-bath, a little over 2,000 square feet again, and this sold on the sold price of $2,100,000. It listed at $1,595,000, and so that's a $505,000 increase. Again, Darren, for me, wow, because I'm barely one house or so away from this. Took 11 days on the market to sell, and this is brought to us by Eva Rose Burgess and Tracy Dover at Compass. And on the buy side, Bradley Holmes, Joanna Soul, and Kevin Rice over at Compass. So we know this house to a certain degree. This did, I think when we saw it, Darren, it only had a garage. It did not have an ADU.
Right.
So that formula continues again. But house plus sunroom plus ADU right now equals $2,100,000 in this neighborhood.
Yeah, nice aluminum sunroom there. In all sincerity, this house has some components that are not perfect. It's not that complete remodel. The front is a little funky. The curb appeal isn't amazing. I like seeing that because it makes it have a slight uniqueness, and the person who staged it and laid it out kind of knew what they were doing to deflect from those maybe slightly lesser desirable components. And that's a really important thing to understand as a seller. You don't have to fix everything. Fixing the right things in the right locations is what's key to getting the best price.
Right. Well, like I said, Darren, I just got our new open house signs. I feel like putting it out in front of my house now, and we'll see what
Could be a
happens.
marketing tool. Just set up a bench right out front, and
Yeah,
you'll probably
yeah,
meet 200 people in a day, man.
I should. I should put out a desk. You're exactly right, man. Uh, all right. Well, that was fun. Trying to get this darn camera working, but it's not about me, guys. Right? It's about the real estate. So here we go. Let's move on now to. Yeah, I started adding up my square footage there, and I was like, oh, got to do this, got to do this, got to do this.
Right.
All right. Next one is 904 North Avenue 66. This was a listing price of $1,050,000, and it finaled at $1,506,000 for a $456,000 increase. Let me get over there. 904. Okay. And all right. I think we picked this out. No, maybe not. Let's see. All right. 904 North Avenue 66. This is Highland Park, 3-bedroom, 2-bath, 1,542 square feet of living space, sold for $1,506,000. It's on a nice, almost 12,000 square foot lot. That's generous.
Yeah.
And it took 13 days on the market to sell. This is brought to us by our good friends Deirdre Solomon and Shannon Reed over at Keller Williams. Oh, no, now it's KW Capital, right? There it is.
Yes.
There we go. And
Right.
on the buy side, one in the same, Shannon and Deirdre. So congratulations to them. What do you have to say about this one?
Indoor outdoor flow.
Okay.
I mean, it's a good size house, but the living room has a wall of windows that all looks out onto the huge yard.
Yep.
Well staged
Yeah.
to take advantage of that, to feel very open and airy. High ceilings, some original, looks like mid-century elements, and accented by mid-century furniture.
Yeah.
It's overall, it's got a cohesive design and some nice features with flow and yard size. It's great.
Yeah. No, it's those big beautiful trees as well in the back. Yeah, just really nice. Can't replace that. Okay, let's move on. The final seller win for this week is, let's see here, 1923 Holly Vista Avenue. It started at $1,279,000 list price, and it landed at, let's see, $1,570,000 for a $291,000 increase. Oh, we got a frozen screen here. Goodness. There we go. Let's try that.
I just see us, Joe. I don't see.
Oh yeah. Oops. Let's go over here. Share. Gosh. It's so weird, man. It's not letting me share. Let's see. Wow. Well, overall, I have no way to control it.
Well, maybe we just finish up. We talk about this one, then we'll just have a quick conversation about inventory.
Yeah.
And what's coming on.
Yeah. Huh. This is the first time this happened. There's always a first time. Oh well.
Sure.
Yeah. Go ahead.
So you could wrap up on this one if you want to give some specs, even though we can't see it.
Well, so what it did was with that $291,000 increase, I'll look it up. Let's see, 1923. This is in Los Feliz, 3-bedroom, 3-bath, 2,239 square feet, selling for $1,570,000. It's on a 4,500 square foot lot. And 43 days on the market. It took a while. This is brought to us by John Costry over at Normand and Associates, Jennifer Eckert and Catherine Deering. Brian Treatler at Normand and Associates was on the buy side. And,
So you guys can't see the photos here, but this is a
Wow.
partially built property. It's in process of being remodeled.
Yeah. Wow.
So it's a lot of square footage, but it's definitely a fixer and partially done. Either somebody bought it to finish it and live in it, or we'll see it on the market in another 3 to 6 months.
Yeah. Yeah. Well, when I saw that price, there was something suspicious.
Yeah, it's a good price for that area.
Yeah.
Absolutely.
Oh, how funny is that? Okay.
Well, cool.
Well, look, guys, we tried our best for some reason out of, God, Darren, I think we've done like 62 of these.
Gosh, really? Wow.
Yeah, we did last year plus 10 weeks this year. It's pretty crazy. But the technology didn't work for us. So how did you want to close out, Darren?
Well, close out just, yeah. So, there's a little more inventory than what was sold, right? I show 30 new listings from the list you sent me this morning.
Right.
Often we're trying to gauge what's on the market, under $1 million, over $1 billion, what's our price ranges. There was a decent amount that came on the market in this past week that are under $1 million. I'd say more than half the inventory that I'm seeing, maybe quite a bit more. Now there's a good amount of those that are in the 9s, but there are some in the 7s, a few in the 6s. Obviously they're getting smaller. The neighborhoods aren't as nice, particularly when we get to those lower categories. But it was inspiring to see some other options. Where they'll end up, who knows? But I felt like there were some unique opportunities, a few that are a little bit of a fixer, a few that are just right-sized homes in good neighborhoods. So
got it.
I like seeing that.
Nice. All right. Well, look, guys, we will bring out the special effects and the dancing girls next week. But for this week, this is what we've got. Thanks for joining us. We'll see you next week, Tuesday at 2 p.m. Have a great week. We'll see you real soon. Take care.
Bye.
All right.